The US dollar and other markets are reacting to the Moody's downgrade late Friday. We're seeing US stocks lower. We're seeing bond yields higher, bond prices lower, and we're also seeing the US dollar lower as investors shun the US. In this video, I'll take a look at three of the major currency pairs to kickstart your new trading week in the US. So let's get started. I will start by taking a look at the euro on the daily chart. Why the daily chart? Because you see this level right here. This level corresponds to 1.1275. The 61.8% retracement of the move down from the 2020 high to the 2022 low also is in play. It's 1.12709. So 71 to 75 is a key level. We broke through that level finally after trading above it through here through the month of April. In May, we've rotated back below that level, and we try to stay below that level. But as you can see, we're back up, retesting that level between the 71 and 75 level. Let's remember those levels. Let's go to the hourly chart. If we take a look at the hourly chart, this high level corresponds roughly with the 75 level. The low of this swing area comes in at 65. It was defined by these different swing lows through here, which form this floor. So not only do we have this floor here coming in play around the 71 to 75 level, we have those levels off at the daily chart to contend with on the top side. So now you can see that the price did move above this area here, but we've rotated back to the downside, currently trading at 1.1267, so just below the 71 level. So our sellers leaning against this area after trying to break above it. We will see him trading here today, but just keep in mind the 71 to 75 level. If we move above it again, we could see further momentum to the upside as the dollar selling continues. Alternatively, if we can't get above that level, and traders may lead against this level, you have an option because risk can be defined and limited. We could see a rotation back to the downside. It could take the price back down toward the 100-hour moving average, or 200-hour moving average. Just a green line in this chart at 1.12118. That really is the next key support level on the downside. As you can see in last week's trading, we did kind of try to move above that level right here, failed and rotated to the downside. So we haven't really been above the 200-hour moving average, and going back to this date right here. Let's take a look at the dollar versus yen next, and we'll look at the hourly chart. And as you can see, that the hourly chart has been on a downward trend, but on Friday we did see a rebound back to the upside, so the price back above the 200-hour moving average. That moved to the upside sort of failed into the close, and we did close a little bit below that 200-hour moving average. In trading here today, we continued the downward momentum in up and down fashion. We moved down, we moved up, and moved down again, but we are finding support against what the 100-bar moving average on the 4-hour chart that comes in at 144.6. Now we're currently trading at 144.92, so that's going to be the key barometer, and so far the buyers came in against that level, pushed the price back to the upside. So as long as the price can remain above that level, the buyers are still in play, but obviously the selling pressure from last week and into this week is keeping the buyers at bay. They're nervous, okay? So we do have to ultimately extend higher all the way up to the 145.986 level up here, and the following 100-hour moving average is start to catch up and break below the 200, and that's going to be probably our next key target on the top side if the buyers are to take control. Alternatively, traders may look for this little gap between Friday and Monday's trade, which came in, it looks like around the 145.50-ish type area. So be aware of that on the top side, but right now the focus is on the 100-bar moving average in the 4-hour average chart. If we stay above it, it keeps the buyers in play, and we'll see how far the corrective move can come off of that level in trading here today. Finally, let's take a look at the sterling versus US dollar. We'll look at the hourly chart. This currency pair has been mostly consolidative near the highs here for longest time. I'll put a red box around where most of the trading has taken place. And last week we did try to break to the downside through here, but and we did break below 38.2% retracement of this move to the upside at the 131.61 level. But as you can see, the momentum to the downside faded, and we reestablished support at the 38.2% retracement, moving back up into this red box and into more neutral territory and above and below the 100 and 200-hour moving average. In trading here today, you can see how the low prices in trading here today came within this 100 and 200-hour moving average range, between 132.80 and 132.94. Found support buyers and pushed to the upside. We are moving above this swing area up here between 133.61 and 133.78. We did move above it a few weeks ago through here, but the 2 times above that we failed, and then we reestablished resistance against that area before moving to the downside. So this area is now going to be close support. If we're able to correct into this area and bounce and stay above it, the buyers will remain in control and will look toward our high prices here between 134.23 and 134.41. In between that level is 134.33. And the significance of that, you have to go to the weekly, the daily chart. And if you take a look at this high price right through here, this is a 2024 high price. It came in at 134.33. So going back to our hourly chart, that's this horizontal line in between the 23 level, which is our high prices through here, and the 41 level, which is our high prices right there, have the 33 level. So this area between 23 and 41 is key on the top side for the sterling versus US dollar. So there you have a look at 3 of the major currency pairs to kickstart your trading day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.